Good morning, everybody. It is a beautiful day here at Option Pit, and I am Mark Spash, the founder of OptionPit.com. Reminder, this is for education purposes only. None of this should be construed as investment advice. Consult your financial professional. Options have risk. And now the AM volatility report. All right, so let's talk about what's happening in the world. Well, another day, another flat market, vol creeping up. Welcome to what it's going to be like trading tomorrow as well. But then it will end. Thursday will be the last day where we get kind of this kind of sticky volatility that people trade. And you can see vol futures are up. So if I look at VIX, vol futures are higher, right? Now the 29th is down a little bit. I'm surprised that's actually. What's shocking is that next week's future is actually cheaper than July with this vote next week. If there's any value out there in VIX, and there maybe isn't, I look at obviously there's crazy vol, but I look at that future as potential value. If you're looking to hedge off, Brexit risk and things like that, and you want to trade in vol futures, the one expiring next Wednesday is in relative terms cheap. One could do a long S&P, long VIX future expiring next Wednesday for the night and potentially do really well. All right, and but as you can see, there actually is some embedded risk still in July. As important as I think this Brexit thing is, part of me is wondering whether that's going to be an excuse to sell stocks, even if they vote to stay. Just the way things are lining up. But it probably won't. At least the initial knee jerk. We might run right back to 2100 on the knee jerk. Kind of some interesting news with Solar City and Tesla today. You can see Solar City, where the vol's in, but still 68, and it's only up $1.60. All right, and then Tesla, where the vol's 43. I believe it's stock deal. And so Tesla's down 8%. Vol's up. Solar City is up 7.5%, and vol's down. But I think vol could certainly drop more. Vol futures continue to move higher. Like we said, bonds are backing off after what really was too strong a move in bonds. They've now really backed off the last week's craziness, right? After touching over 137, they're back down to 133. So they basically have thrown out the last week and moved back to here. I think we're heading back to 130. All right, I think interest rates will come off probably tomorrow. I see bond vol still really high. I like short call spreads or like bear butterflies as a trade. Currency vol still high in relative terms. All right, and vol still high in Europe, where you can see London down a little bit and Germany down a touch. It's a nice move. All right, so there you have it, folks. I think that's the way kind of everything is set up. I'd be looking for vol to creep higher the next couple of days. Vol futures higher. Interest rates, maybe not. Maybe they back off. Maybe that's the area where it makes sense to take some risk off. But I do like, from a trade perspective, the SPX, I think the contract expiring next Friday, this Friday, has too high a vol. Way too high a vol. All right. And so, I might look at like a short put, long, maybe a short put, long VIX call spread, SPX, VIX contract, VIX trade makes some sense. There's a lot of opportunity out there, structuring it right. You can't be lazy. You're going to have to do a little more work this time around. But US vol, watch the blog that I posted last night. US vol is just insane. All right, it's just absolutely insane, way overpriced. And the June 24 contract, I mean, in 30, they're pricing the straddle at almost $40. All right, but look at the skew. I mean, $150 out of the money, or $125 in the money, I can still get over $1 for the put. That skew is insane. All right, folks. Hope everybody has a great morning, and I will talk to you soon. If you have questions, you can email me, mark@optionpit.com. You can call me 888-TRADE01. Have a good one.